Good morning, welcome to the program. This is Inside India. Dan Murphy with you this hour. Let's get straight into your headlines. First today, reports emerge that India and the US may be closing in on a major trade deal that could drop tariffs to as low as 15%. But Russian oil is still a key sticking point. We'll discuss. Plus, the blistering gold rally screeching to a halt. Gold extends losses after tumbling over 6%, its worst drop in more than a decade. And we're live with the CEO of JSW Energy. Hear how the Indian power producer is managing costs after posting a drop in profit despite a jump in revenue. Good to have you with us today. Okay, let's take a deep dive into what's moving across Asia right here, right now. Remember as well, India markets still offline for Diwali, and happy Diwali to you and yours. What we're seeing right now is not so much of a happy day, I guess you could say, across the markets. A pullback from the solid gains that we saw across equities yesterday. Most major indices actually in negative territory here, with the exception of the Kospi and Singapore's Straits Times Index. The Straits Times actually eking out what is a second day of gains here, up by 0.3%. The Kospi also mirroring those gains, but the likes of the Nikkei 225 pulling down by around 0.5% today. Indeed, Hong Kong's Hang Seng is among the loss leaders, also down 0.6%. The TAIEX down by 0.7%. And to one of our top stories today, gold and silver both retreating from record rallies. Gold actually extending declines in Asia now after tumbling over 6%. That was its steepest drop in more than a decade. The yellow metal now hovering around the 4,100 level. Investors are now pivoting their focus to the key Trump-Xi meeting in South Korea next week, as signs of progress could cool demand for safe haven assets. Stanchart has been among those. Stanchart actually called this. They expected a short-term correction. Take a listen to what the head of commodities research told us on the show yesterday, especially around the Indian festive buying season.
What happens when India's demand slows down? We're moving past the Diwali-related buying at the end of this week. We will then have wedding-related buying that will help to keep some of that momentum, risen. But we think that prices are ripe for a correction in the near term. We are expecting record highs going into 2026, but prices have been trading at overbought territory since the start of September. So for a healthier upward momentum, a short-term correction would actually benefit the longer-term trend.
So we're going to talk more about gold later on in the program, but let's also talk about trade. We're hearing today that the US and India may be close now to finalizing a trade deal, something we've been speaking about all week. India's Mint paper reporting that the US may slash tariffs on Indian imports to around 15%. From the 50% announced previously. Now, according to the report, which CNBC has not independently confirmed, it would see India scaling back its Russian oil purchases. Energy and agriculture have been among sticking points in the US-India trade relationship. As I mentioned, there's been no confirmation from India's Commerce Ministry or the White House on that. But it does come after President Trump held a phone call with India's Prime Minister Narendra Modi, where they spoke about trade. Trump saying Modi had assured him that New Delhi would cut back those Russian oil purchases.
Well, we stand great, and the people of India, I love the people of India, and we're working on some great deals between our countries. I spoke to the Prime Minister Modi today, as I mentioned before, and we just have a very good relationship. And he's not going to buy much oil from Russia. He wants to see that war end as much as I do. He wants to see the war end with Russia, Ukraine. And as you know, they're not going to be buying too much oil. So they've cut it way back, and they're continuing to cut it way back.
President Trump there. Back to the markets, and the Nifty 50 extending its recent rally after yesterday's special one-hour Diwali trading session. The benchmark index now slowly approaching the 26,000 level. Remember, the market is actually shut today. Also thin trade for the Indian rupee. The currency has been trading near record lows, breaching the 88 level in the past week, and also prompting central bank intervention as well. And new data suggesting some concerns about growth. Industrial output in September up by a mere 3% year on year. That was its slowest in 3 months, with a decline in coal, nat gas and refining products. Well, shifting our focus to Japan as well, and the country has just elected its first ever female Prime Minister, Sanae Takaichi, after she secured a majority of seats in the lower house election yesterday. In her first press conference, she vowed to restore Japan's global leadership. Take a listen.
At the first cabinet meeting, I will instruct my cabinet to compile economic measures. We will take firm action to address the rising prices that the public is currently facing. President Trump is scheduled to visit Japan soon. If I manage to meet him, I would like to deepen the relationship of trust between the top leaders through the candid exchange of opinions on the issues Japan and the United States face. APEC is another important regional framework. At the summit meeting, I would like to strongly emphasize the importance of maintaining and strengthening a free and fair economic order based on the rule of law.
Sanae Takaichi there. She also appointed 19 members in her cabinet, but only 2 of whom are women. It has disappointed some who were expecting more change. Satsuki Katayama was appointed as the country's first female finance minister and is now tasked to oversee FX policy, debt management and Japan's budget. In an interview back in March, Katayama had previously suggested that the Japanese yen's real value is closer to 120 to 130 against the US dollar. And just in the last hour, Japan's new Minister for Economic Revitalization, Minoru Koichi, saying it's important for the government and the BOJ to cooperate on economic policy. Also adding that adding hopes that the central bank will closely coordinate with the government to achieve their 2% inflation target. He also said there needs to be support until they achieve strong wage growth as well. Okay, so here's where dollar yen stands right now. 151.65 is the level you can see down by 0.2%. Let's get an update on what's happening in the currency space with Michael Wan. He's senior currency analyst at MUFG Bank, joining us live from our SGX studio this morning. Michael, welcome to the program. Look, let's start on Japan. I think this is pretty important to pick up on here because we have seen dollar yen trading above this 151 level off the back of Sanae Takaichi's rise to power. Of course, how much of the recent volatility that we've seen in yen is actually being driven by this political instability, or are there other factors at play here? What's going on?
Yeah, thanks so much, Dan, for having me on this show. Yeah, definitely the policy dynamics and the policy direction of the new Prime Minister, Takaichi, will be very important for the path of the yen moving forward. But of course, there are other things that affects the yen, including the US dollar, Fed rate cuts. But in general, our expectation is that there'll be modest fiscal expansion by the new administration, partly to address some of the problems around inflation that has been one of the key themes that has come out of not just this election, but past elections as well. And I think markets are looking quite closely, not just at the Prime Minister and also the coalition between LDP and Ishin, but also very closely at some of the cabinet appointments, as you mentioned earlier, around, in particular, the new finance minister, Katayama, and how some of the fiscal policy push and the views towards the yen could evolve moving forward. So I think that's definitely one big area. So bottom line is that we think that there'll be modest fiscal expansion, but probably not enough to sort of push yen, dollar yen up sharply from here. So we still think that moving forward, dollar yen will come towards 150 by the end of this year, and probably towards 148 by the first quarter of next year. So that's the kind of path that we're looking at moving forward for dollar yen.
Okay, so Katayama, Japan's new finance minister, of course, on the record saying yen should be closer to 120. So how should markets read this? Are we underestimating her influence on FX policy here?
Yeah, that's a good question. I think, when it comes to the long-term value of exchange rates, it's always debatable. These things can take a long time to reach equilibrium. So sort of 120 to 130 actually kind of makes sense to our minds. But of course, over the short term, there are many things which affect, including policy and fiscal direction. I think what markets are looking for in terms of clarity from the finance minister is in terms of the views towards whether there'll be any pushback if yen were to weaken sharply from here. And number two, I think any views around sort of the coordination between the government and Bank of Japan in terms of rate hikes. So our house view is that the Bank of Japan will still be able to hike rates, although maybe at a slower pace than before. And our view is that the fiscal expansion will happen, but at a somewhat modest pace relative to, I think, what was earlier feared in the earlier part of the election period.
There was also a suggestion that if we saw the BOJ delaying hikes, then we could be staring down 155 for dollar yen. So what do you think the pain threshold is right now for the government and for the BOJ?
Yeah, that's a good question. I think for the government, I don't think there's a specific level in mind. Historically, it's been more the pace of move which matters. So that could reach the sort of maybe 157, 160 kind of level. It's the kind of probably threshold that market participants are currently looking at quite closely moving forward. So in short, I don't think we're there yet in terms of that quote unquote pain threshold. But taking a step back, broadly speaking, I think what's clear is that this cycle is quite different from the past cycles that we've seen, especially under Abenomics. Right now the inflation is much higher, wage growth is picking up to some extent. The Bank of Japan, it's on a rate hiking cycle right now, and to some extent the external environment, tells us that there probably will be some pushback if the yen were to weaken quite sharply moving forward. So that's our base case for our forecast.
Yeah, I think it's a really good point, Michael. And of course, there's still a lot we don't know about Sane Takaichi. Yep. There's a lot we know, but there's also a lot that we don't know. Markets are going to be testing her credibility. Markets are also ultimately going to be testing her policy as well. And effectively, yep, we're now in a watch and wait mode to see what type of approach she's going to take. Japan is essentially under new management now, and of course that raises a lot of risks but also opportunities for market participants. So look, let's take a step back here. Given what we do know about Sane Takaichi so far, if you could score her economic policy, or at least what she's said, out of 5 stars, what would it be right now?
That's a good question. Yeah, I think it's very commendable. I wouldn't want to give a specific number, but I would say the big picture to my mind is that inflation is an issue, no doubt, and that definitely it's part of the reason why you've seen some of these political changes domestically in Japan. And I think with that, it's a little bit of a new era where you have structurally changing demographics, tightening labor market, and to some extent, that's reflected in higher inflation expectations, and companies are revisiting this lower price cycle that you've seen in decades past. So I think that the broad direction is correct. I would say that addressing the concerns of inflation, but importantly also moving towards gradual sort of rate hikes would ultimately sort of contain inflation expectations over the medium term.
Okay, so watch this space. Michael, let's shift focus over to what's happening with the rupee. Of course, we're keeping a really close watch on what's happening inside India, given the fact it is Diwali right now, and we've seen some interruptions to trade as the festivities continue. The rupee, interestingly, rebounding from record lows, but just walk me through how sustainable you think this recovery is, given the recent intervention.
Yeah, so there's certainly many things that's impacting the rupee right now. Broadly speaking, number one, tariffs. Number two, transformation. And as you mentioned earlier in the opening remarks around tariffs, the question marks around the elusive trade deal, at least so far, between the US and India, it's weighing on the rupee as we speak. I think the good news is that the news flow that's been coming out shows that there continues to be talks and negotiations. I think the good news is that there continues to be attempt to meet the minds between both sides. So I think those are good news. My personal sense is that India probably won't get a lower tariff rate relative to its export competitors. And the reason is that there's still many structural sort of issues around agriculture and other domestic issues, which I think India definitely wouldn't want to give up, and for good reasons. So I think that the base case is to have lower tariffs relative to what you've seen, the sort of 50% reciprocal tariff, but with the sort of very good negotiations still ongoing. I think that it's likely that it's probably lower to around maybe 25%, not at 15 to 16% that's being put out in some news articles right now, I think.
Okay, so we shouldn't be giving too much credibility to this report that suggests we could see tariffs cut to as low as 15%. Is that what you're saying?
What I'm saying is that I think the likelihood is that tariffs will be higher than other countries. But if it comes down to 15, 16%, it would be an upside surprise relative to our expectations. And our expectation is ultimately for the Indian rupee to underperform modestly moving forward against some of the key currencies. And tariffs is one important issue. But of course, much in terms of negotiations, as you know, when it comes to any relationship, communication is key. And, this give and take will be important to see, what both sides will be able to provide for each other in this trade negotiation.
Yeah. It's a fair point. I'm also just interested that you're throwing some cold water on this report. I think it also makes sense because, of course, this issue over Russian oil still looms large between the US-India relationship. Would you say that that's the key sticking point, at the moment, or are there other factors at play beyond just the oil trade?
Yeah, I think that's a great point. So on the Russian oil front, I think it's not a binary situation in the sense that it's not a 1 or 0. So it's not that, it has to switch off completely in terms of purchases of Russian oil. The kind of data that we've seen, of course, it's incomplete and not official, but based on the ship tracking data, tanker tracking data, it does show that India has been reducing its imports of oil directly from Russia, over the past, say, 2 months or so. But the oil market has also been helped by some of the redirection to other countries and including to some of the unknown destinations as well. So ultimately, I think from India's perspective, they probably can take heart a little bit from a global oil market perspective that oil prices have not yet spiked, despite some of this lower reduction in oil purchases directly. If this ship tracking data it's to be taken into account, and I think that that's part of the reason why we think that tariffs won't stay at 50%. I think this Russian oil thing will ultimately result in India having tariffs being lowered from 50. Probably down to around 25, but still higher than its export competitors.
Michael, can I ask you about gold as well? We've just seen prices taking part in what you could call quite a significant pullback here, maybe even a correction. Of course, that is also part of broader risk aversion that we're seeing playing out across the equity space. But how does it tie into the FX market behavior in Asia right now as well?
Yeah, so I think 2 points. Number one, on the global perspective first, then number two, on the Asia perspective. I think on the global perspective, yes, it's true. Gold prices have had quite a sharp pullback, but that's got to be put in the context of the very sharp rise that you've seen earlier, and it's been phenomenal so far. And I think the big sort of global dynamics is that gold, it's sort of seen as definitely a hedge, including by central banks. China and India have been definitely purchasing more gold in terms of the central banks. You're seeing more households across the region purchase more gold. And gold, it's one of the few assets where it's no one else's liabilities, unlike other key assets and safe havens, including US treasuries. The second point is on Asia. There's some specific transmission mechanisms towards Asia, including the very high pension for gold in India, for instance, where it can affect the current account deficit. And in the likes of Vietnam and Thailand, it affects these smaller countries differently, with Thailand being a little bit more of a gold trading hub. So I would expect the Thai baht to be a little bit under pressure with the fall in gold prices. But bottom line, I think from a big picture macro perspective, this diversification away from traditional safe havens should mean that gold should do quite well moving forward beyond this short-term correction.
Yeah, still up double digits year to date. Michael, just before I let you go, what's your top FX trade idea for the rest of Q4?
Yeah, so in terms of our ideas, we think that the Indonesian rupiah should underperform moving forward. I think putting aside the views about the dollar, that's a very clear local story in terms of concerns about the fiscal dynamics in Indonesia, in terms of Bank Indonesia turning a lot more dovish already, and you have Bank Indonesia's policy meeting later today. So we'll see what happens later today, but our expectation is that Bank Indonesia will cut rates and will continue to keep a dovish tone. And with that, we think that the corollary is that the Indonesian rupiah should adjust weaker. And so we think that dollar IDR could go closer to the sort of 17,000 kind of levels moving forward.
Okay, good stuff. Michael, we'll leave it there. Appreciate your analysis. Thanks for coming on today. Michael Wan there of MUFG Bank. We'll speak again soon. And as we tail off into a break, take a look at the situation in Delhi. After Diwali celebrations concluded, air quality there taking a hit after thick smog covered India's capital city for 2 straight days following fireworks to celebrate the Festival of Light. And of course, the use of green crackers as well, which have lower emissions. The Indian government rated the air quality as, quote, very poor, and also warned the situation will continue for the next few days. Stay with us. You're live on CNBC. We're back in just a few minutes' time. Welcome back. Well, we are in the thick of US earnings season. Netflix missing third quarter earnings estimates, but posting better than expected forward guidance. The streaming giant saying it aims to finish the year strong with a, quote, exciting Q4 slate as it expands into video games and advertising. CNBC's Julia Ballston has a full breakdown.
Netflix's third quarter revenue coming in right in line with expectations at $11.5 billion, while earnings per share disappointed, $5.87 versus the $6.97 that analysts had anticipated, with margins falling short. The company is saying this is due to an ongoing dispute with Brazilian tax authorities, which Netflix says they do not expect to materially impact future results, guiding to fourth quarter revenues and EPS just ahead of estimates and operating margin short of estimates. Netflix, in its call and its letter to shareholders, saying that they see healthy engagement, its highest quarterly share of viewing in the U.S. and U.K. ever, and saying that Netflix recorded its best ad sales quarter ever, on track to double ads revenue this year. The company is also bullish in face of concerns about AI potentially infringing on copyright, writing, quote, "We believe generative AI presents a significant opportunity for us to deliver benefits to our members, creators, and business." Going on to say, "We're empowering creators with a broad set of Gen AI tools to help them achieve their visions." The company noting how Happy Gilmore too used generative AI. They also note that generative AI is enabling them to test more impactful ad formats. Now, as for questions about whether Netflix is interested in potentially buying all or part of Warner Brothers Discovery, the co-CEO saying they have traditionally been builders rather than buyers, and they don't think they need to buy anything, but they will definitely look at the asset. Julie Borston, CNBC Business News, Los Angeles.
Lots more report cards ahead as well. More than 80 S&P 500 companies are due to release quarterly numbers this week. Intel out on Thursday, EV maker Tesla, and Las Vegas Sands also due to release earnings tonight, US time. Analysts expect earnings to grow just under 9% this season. That's after 2 straight quarters of earnings expansion of nearly 14%. On the other side of this break, more earnings ahead. JSW Energy's second quarter profit slipping, but renewables power a surge in revenue and cash flows. We're going to break down what's driving the earnings mix and what it signals for the growth outlook with Sharat Mahendra, the CEO of JSW, right on the other side of this. Stay with us. Welcome back. You're watching Inside India. Here are some of the other stories we're keeping tabs on outside of India today. First, the face-to-face meeting between US President Donald Trump and his Russian counterpart Vladimir Putin is on hold, at least for now. The meeting was first announced last week and was supposed to take place in Budapest, although a date had not been set. When Trump was asked why the planned summit was postponed, he said he didn't want to have a, quote, wasted meeting. Listen in.
No, I don't want to have a wasted meeting. I don't want to have a waste of time, so I'll see what happens. But we did all of these great deals, great peace deals. They're all peace deals. They're agreements, solid agreements, every one of them. But this one, and I said, go to the line of battle, the battlefield lines, and you pull back and you go home, and everybody take some time off, because you got two countries that are killing each other. Two countries are losing 5,000 to 7,000 soldiers a week. So we'll see what happens. We haven't made a determination.
Meantime, US Vice President J.D. Vance is currently in Israel as the ceasefire brokered by the US comes under pressure. Israel and Hamas both accusing each other of breaching that truce, but Vance has expressed some cautious optimism that peace will hold. He also sent a warning to Hamas if it doesn't uphold its end of the deal.
What we've seen the past week gives me great optimism the ceasefire is going to hold. And look, our warning to Hamas is very straightforward. The terms of the 20-point plan that the president put out there is very clear. It's supported not just by Israel, but by all of our Gulf Arab friends. It's that Hamas has to disarm. It's that Hamas has to actually behave itself, and that Hamas, while all the fighters can be given some sort of clemency, they're not going to be able to kill each other, and they're not going to be able to kill their fellow Palestinians.
And over in Asia, South Korea's military said North Korea fired a ballistic missile, but did not provide further details. Local reports earlier said the launch was headed towards the sea off North Korea's east coast. The newly appointed Japanese Prime Minister Sane Takaichi also confirming that there is no damage to Japan's exclusive economic zone or Japanese waters. Okay, let's push forward and give you a live look at how oil is trading through the course of the Wednesday session. And with regards to where we stand on both Brent and WTI right now, the market pushing higher. WTI is still sub 60, 58.29 is the level, but look, up around 1.8%. Brent at 62.37, also pushing higher. And Mobile crude oil futures out of the UAE, just sub 65 US dollars a barrel. And take a look at the shares of India's JSW Energy as well. Interestingly, the stock managing to recover some ground in yesterday's shortened trading session. You can see last traded up by around 0.5%. It had tumbled around 5% on Monday after it posted a drop in second quarter net profit despite a surge in revenue. An expansion in renewable energy capacity also helping to drive that top line growth. So let's unpack the JSW Energy story with Sharad Mahendra. He is Joint Managing Director and CEO of JSW Energy, joining me live now. Sharad, a warm welcome to the program. Great to have you on today and really looking forward to unpacking the strategy here. But before we do that, let's talk about what happened with shares this week and, of course, your latest earnings release as well. Walk me through this. Revenue up 55% year on year, but profit down 17%. What's the story behind that divergence?
Yeah, good morning, Murphy. Yes, our revenue growth has been 52%, driven by a significant increase in the net generation and the energy sold in the market. We have to remember that in India, the demand has been comparatively muted in the first half of the current year, though second quarter showed an increase of almost 3.3% growth. In case of our profits, net profit, we have to remember that if we compare maybe 1 year back, the asset block for JSW Energy was in the range of almost 64,000 crores, which has increased by close to 49,000 crores, and the asset block remains at 113,000 crore rupees. This is primarily driven by the large acquisitions we did in the month of March and April of 25, which is KSK Mahanadi, the thermal plant, and the O2 power. These all has resulted the increase in debt, and definitely the interest amount increases once you draw the debt. And we have to remember that these investments have given us the profits only for a part period of the year, which is 6 months only. So on an annualized basis, these are very, very good acquisitions. And we have to remember that the cash profit, which is very important in this business, which is 3:1 debt equity business, our cash profits have increased 27% during Q2. And in the first half of the year, the cash profits have improved by 44%, which enables us to continue our growth path, which we have planned for.
Indeed, cash profit up 27%, EBITDA up 67%, up double digits on the EBITDA side. So, look, I mean, assessing this at a back of a napkin level, this is a cost management issue, is it not?
No, it is not exactly the cost management, as I told earlier, that once we draw the debt, the interest part starts. The the debt to acquire a large asset is paid on day one, and the interest we have to start paying. But on an annualized basis, we are absolutely confident the track what we have, the predictions what we have given, we are well on track on that. And keeping in mind our debt to EBITDA ratios, debt to equity ratios are well on track. We are comfortably placed at 4.8% debt to EBITDA on if you include the construction work in progress related debt. So this is just a temporary phenomena, and whatever we have planned, nothing unexpected. And we are absolutely confident that what we have planned and committed, we will be, and given the guidance, we will be well on track on that.
And you mentioned that you're comfortable around debt levels right now. How are you going to be managing that leverage moving forward, particularly as you continue, what on the outside looks like quite an aggressive scaling strategy here?
Yes, very correct. We are, as we are talking, we are at an operating capacity of 13.2 gigawatt, and by year end, we are confident of crossing 15 gigawatt of operating capacity, which will give us good benefit in the next financial year, full year. So for that, as I said, that we have given a guidance of our debt to EBITDA ratios, and as and when required, if required, we will be going in the market to raise the equity, but to maintain our growth strategy. But yes, we have taken a enabling approval from the board and the shareholders to raise up to 10,000 crores going forward. So as and when required, maintaining the growth strategy, we will be open to raise the equity in the market.
Okay, open to raise equity. Any timeline on when you might need to pull that trigger, or are you comfortable at this point that you might not need to at this point?
No, see, at this time, if you see the cash profits, what we are carrying, and as I said, it is a 3:1 debt equity, we have enough of cash profit to maintain what we have given the guidance of 15 gigawatt by year end. So we are very comfortable. But yes, we have to ensure that this is a area where we have to, when we start a new project, it takes 2 to 3 years to commission. So as and when required, as I said, enabling, we have to ensure that my ratios are protected well within the guided rails what we have given to the market. We will be, that is the reason we have taken the enabling approval, that at a short notice, if whenever we need, we can raise the funds.
Okay, fair point, Sharad. And just a final question on the numbers here before we talk about the broader growth strategy. You added around 443 megawatts of renewable capacity this quarter as well. It's a huge number. How much of that is already contributing to earnings?
All the three. See, this capacity which has got commissioned during Q2 has partly contributed during the quarter operations, out of which 240 megawatt is a greenfield hydro power plant which we have commissioned in a record time in the history of the country. In a span of 6 years, we have commissioned in difficult terrains of Himalayas, we have commissioned 240 megawatt hydropower, which has a 30-year power tie-up with one of the states. So it is a power purchase, long-term power purchase agreement. And in addition to that, the wind and solar, what we have commissioned during the quarter, will contribute going forward. But we have to remember that in the second half of the year, normally the wind speeds reduced globally, and the wind generations comparatively reduce is after or post-October. But solar definitely is better in the second half of the year post-monsoon. So these assets are going to contribute going forward more. It has partially contributed during Q2.
Indeed. So, Sharad, let's talk about the broader strategy here. I'm speaking to you from the Middle East. I've lived in the Middle East for almost 10 years now, so I take more than a passing interest in what's happening in the global energy landscape, right? And India has been such an interesting story to tap into because at one point, India's population growth rate alone was the equivalent of one Los Angeles every year. So we're seeing demand for power surging on the ground in India. And companies like yourself have really been working hard to position into that growth. So walk me through the plan here. How do you intend on continuing to build out capacity to meet that demand surge? And ultimately, what's the end goal for JSW?
Yeah, very correct. Actually, the way the Indian economy is growing, one of the fastest growing economy of this size in the world, and this year also projected to grow maybe around 6.5% to 6.6%. And this economic growth, we have to remember in India, that is being driven by core infra growth, manufacturing-led growth, and the urbanization. These three are big key drivers for the economic growth and also the key drivers for the energy demand also. So we are seeing a demand. Of course, in the first half of the year, this year, we have seen a slight blip in the demand growth, which is comparatively lower. But we have to remember it has been an extended monsoon this time, more than 5 months, which are resulted in. But fundamentals for the economy, for the country remains strong. So the strategy for us to take advantage of this growth and to contribute in the India growth story is that energy security and energy sustainability. These two are our core themes. Security is when the economy has to grow, the base demand grows, for which the round-the-clock reliable power is required, wherein now the artificial intelligence, the AI centers, the data centers which are coming in are huge power consumers, wherein the reliable power is required round the clock. And also the energy transition, which India has already announced of reaching 500 gigawatt of green energy by 2030. So we are contributing to the both. As we have announced our strategy 3.0 few months back, that reaching 30 gigawatt by 2030 with 2/3 portfolio of green energy and 1/3 of fossil fuel, which is the thermal power, we are well on track to contribute. So energy security and energy sustainability, these two are our core themes going forward.
Yeah, addressing the energy trilemma is obviously, key to ensuring that all of this happens in time and on budget. Sharad, let me pick up on something you mentioned there. You set a target of 30 gigawatt generation and 40 gigawatt hour storage by 2030. You mentioned you're on track, but what would you say is the biggest risk to that timeline now?
See, the biggest risk, Mufi, is that the execution challenges in India. Execution challenges, we have a dedicated risk assessment team which is in place, which do the risk near-term, medium-term, long-term risk assessment, and then the counters, what needs to be done, the counter action plans to overcome those risks. The key risks, what we have identified a year back, on which we are acting, are one, execution, which is related to the land, right of way, and the connectivity. These are the challenges. And for next 2 years, whatever capacity addition plan we have, we are well on track with a significant portion of land already in our position to execute our projects. Connectivities from Government of India and the state governments are in place to ensure the power evacuation. Next is the supply chain. That is, we see as a challenge in terms of getting the equipments right on time and also at the right prices. So we have taken some backward integration steps, and we have entered into battery energy storage containerized solution manufacturing, which we are going to commission by end of the current quarter, means before December 25, to take care of our captive requirements. And even if others in India needs, we will be in a position to supply to the market also, because right now the dependency is totally on imports. So that is one step. In fact, in wind, we are adding significant capacities in India. Last year, in fact, 1/3 of the capacity, what country added, 1/3 was by JSW Energy. So there also we saw the challenges in terms of getting the wind turbine generators well on time. So we have entered into technology license agreement with one of the leading players of China, which is SANY. They have started the manufacturing in India, and as the suppliers have started. Wind blades were coming from China, which is a huge logistic challenge as well as the cost. So we have we have signed the technology agreement with SANY, and we are setting up our own blade manufacturing plants, which will get commissioned, two plants, which will get commissioned during the year. One of the plants which we acquired from Siemens Gamesa will get commissioned by January or February of 26, and another is the greenfield plant, which also by year end, by March 26, will get commissioned. So these are the challenges in terms of equipments. Another is in the thermal space, getting the boiler turbine generators well on time has been a big challenge to execute the projects on time. So we entered into discussions with GE, and GE had a thermal boiler plant in India. We have signed the agreement, and we have acquired the Indian facilities of boiler manufacturing from GE to take care of our own captive requirements. For turbine generators, we have a joint venture with Toshiba of Japan, and wherein we will be getting the turbine generators on time. Last but not the least
Right.
of the risk factors, what you asked, I will like to definitely stress upon is the skill set and the people who are required to execute the project. So much happening in India. So we are focusing in a big way in terms of skill development and enabling our people, and also bringing people from outside, training them to execute the projects across the country.
Sharad, final question here. You're operating in the green tech space, of course, but right now India is in President Trump's crosshairs, not just over trade, but also on the purchases of Russian oil. As someone operating in the private sector space, in the energy area, what's your response to that? And what do you make of this hoo-ha between India and the US right now?
See, we have to understand that when I said that energy security is very, very important, and the world realizes the importance of India's economic growth, which is led by manufacturing. Today, the manufacturing contributes almost 17% to the Indian economy, and the target is to reach 25% contribution to the Indian economy by manufacturing. China, if you see today, with this size of economy, 27% of the economic contribution is from manufacturing. So India also has similar plans. World realizes this. We see more as a geopolitical thing, but yes, as a private industry player, we don't see any challenges in the operations in the Indian economic growth because of these factors. And also, as JSW Energy, we are absolutely insulated from these uncertainties.
Right. Okay, Sharad, we'll leave it there. I appreciate the conversation today. Hey, thanks so much for coming on. We'll speak again soon. Sharad Mahendra there from JSW Energy. Stay with us here on Inside India. We're back in 2 minutes. Welcome back to Inside India. The International Air Transport Association, or IATA, is hosting its World Sustainability Symposium in Hong Kong, where industry leaders are gathering to discuss some key issues. Our travel and transport reporter, Monica Petrelli, joins us live now. Mon, you had a chance to speak with the IATA Director General, Willie Walsh, earlier today. Walk us through some of the key lines.
That's right. Good morning. So we saw there's I spoke earlier today to Willie Walsh about a new program that's just been launched at this symposium. It's called the Integrated Sustainability Program. And this is IATA's way of showcasing which airlines are doing the most in terms of sustainability. Now, Walsh said that much of the 2015 goals for the aviation industry still hinge upon SAF, that's sustainable aviation fuel. That's both in terms of production as well as prices. Now, by both metrics, neither doing well, not quite yet. In fact, SAF still estimated to cost around 3.5 times that of jet fuel. And we can see that this is not good news, especially for an industry already dealing with higher operating costs caused by geopolitics, as well as that continual shortage of planes and parts. Now, last week, the FAA saying that Boeing can increase production of its 737 MAXs from 38 to 42 per month. But I asked Willie Walsh, will this make a dent on that global backlog of jets, which now stands around 17,000? And here's what he had to say.
I see it very much as a vote of confidence, and I think it does reflect the significant progress that Boeing has made. You know, the industry is fully behind Boeing. We need a strong Boeing competing with a strong Airbus. And ultimately, when we look to the future, a strong Comac in China and Embraer in Brazil. But it's really not going to make that much of a difference to the backlog of aircraft, which now stands at about 17,000, the highest it's been in the history of the industry. And it is, you know, this lack or the disruption to supply chain is having a big financial impact on the industry. You referenced in your opening remarks the report that we've produced, which estimates that the cost this year will be in the order of $11 billion US. Huge figure, particularly when you consider the very low levels of profitability the industry is forecast to make this year at about $36 billion US net. So we've been very badly impacted by supply chain issues, and quite honestly, we see these issues continuing for a number of years yet.
In terms of that 11 billion number, is that, you know, where does that comport with last year or what you're expecting for next year? Is the worst behind us? Is it still ahead of us? Where are we in this in terms of getting ahead of the global supply chain shortage?
Yeah, it's probably, you know, it's not getting worse. It's slowly getting better. But quite honestly, we're way behind where we had expected to be. I think coming out of the COVID crisis, people expected some disruption to the supply chain. But most people felt that that would have been addressed within a couple of years. I think we're now looking towards the end of the decade before we see it stabilized at where we would expect normal supply chain issues to be.
Now, in the meantime, as airlines wait to receive new aircraft, they are forced to fly older ones. In fact, Willie Walsh saying that globally, commercial airline fleet is around 2 years older than where it would normally be expected. Back to you, Dan.
Indeed, Mon. And just to add to that, of course, older planes cost more to fly, right?
They do, exactly. Similar to a car. In fact, like a gas guzzler from 20 years ago, older planes require more fuel. This is some of the biggest costs, around 4.2 billion of that estimated 11 billion in additional costs owing to excess fuel charges. Then you have maintenance issues. Older planes, of course, need to be undergo more upkeep. So they're on the ground more, which is causing more airlines to lease. When you lease, well, that's driven that market up about 20 to 30% from 2019. And then the final piece of this puzzle, we see more airlines holding on to inventory. There's a cost to that. They're holding on to excess parts in order to provide a buffer against future disruptions. It's back to you.
Really appreciate the update. Thanks again for joining us today. And let's get one final check on the Asia markets before we wrap up here as well. Quite an interesting day of trade unfolding today as we track into the open of the Middle East and, of course, the European trading day as well. What we see here is most major regional indices actually under pressure right now off the back of what was some pretty solid gains through the course of the Tuesday trading day. Of course, we have India closed today for Diwali, but the other major markets are pulling down. Hong Kong's Hang Seng actually accelerating some losses earlier today, and you can see now down 1.32%, but we're also tracking significant losses for the mainland markets, down by around just under half of 1%. And of course, Hong Kong's Hang Seng was, as I mentioned, the loss leader. It remains so. Japan's Nikkei 225 also in focus today as we see Sane Takaichi taking the helm there. You can see the Nikkei on the flat line, down 0.04%, sub 50,000 on the index, but indeed one of the markets continuing to show some weakness in the session. Okay, we're going to have more on this on the other side of the break, but that wraps up this edition of Inside India. Stay with us here on CNBC. Access Middle East is coming up next.